In the current fiscal year, 2012, U.S. government will collect $2.6 trillion in taxes, but it will spend $3.7 trillion, and it will have a deficit of $1.1 trillion. That is a very large number. It is coming down from the last couple of years, but it still historically is an unusually high deficit. When we talk about deficits, we always talk about government spending. What are we going to cut? How much are we going to cut? Today I want to look at the other side of the ledger, and I want to ask the question, why are tax revenues so low? Well, historically, taxes have been at 18 to 20% of GDP. They are now at 15%. That is a 60-year low in the United States. The Bush-era tax cuts alone have taken the income tax collections from 11% of GDP to 8.5%. That's a $400 billion loss to the U.S. Treasury. And at the same time, over the last 30 years, what we call tax expenditures have increased. These are giveaways, loopholes, preferential tax treatment for NASCAR, you name it, it's in there. And they have increased to the point of costing the U.S. Treasury $1.2 trillion a year, doing away with special treatment of individuals and businesses would balance the budget and leave us some money. So why can't we do away with tax expenditures? Because each little piece in there has a very strong lobby behind it. Let me give you an example. The National Realtors Association would protect the home mortgage interest deduction to the bitter end, regardless of the fact that $26.5 billion of which goes to millionaires. And the millionaires not only take the deduction on their primary homes, but on their yachts, if the yacht has a bathroom and a sink, and on second homes. And the list of giveaways is a very long list. Oil and gas interests, farmers, boat manufacturers, corporate airplane producers, NASCAR, etc., etc. So corporate welfare is alive, and it's doing very well hiding behind tax expenditures. I would say it's time to bite the bullet and go for tax reform.